So my number 4 favorite dividend stock of all time, United Technologies, ticker symbol UTX, it is splitting into 3 companies. This news just came out. I'm getting a lot of questions on my channel in the comments section below. A lot of subscribers are asking, hey Ian, this is your number 4 favorite stock out of all of the 38 stocks that you own in your portfolio. What does this split up mean to you? Are you going to sell it? What are you going to do with United Technologies? And so today I want to take this opportunity to explain first what's happening with United Technologies, and second, some pros and cons with what's happening, and third, my particular strategy with this split that is happening at United Technologies. So let's get started. So it's certainly an exciting time to be a dividend investor. There is a lot happening right now. And with United Technologies, for those of you that don't know, this is my number 4 favorite dividend stock of all time. They pay a consistently growing dividend. I love them for that. Well-managed company, industrial conglomerate, number 4 position in my portfolio. And in terms of how much I like the company, not dollar amount, by the way, I'm actually actively adding to this company, but we'll get to that in a minute. And they operate in 3 segments. The 3 segments that they operate in are elevators, building equipment, mainly HVAC equipment, and aerospace. And so I want to cover this really quickly. Here's what's happening. In aerospace, there's actually a lot happening. They are closing right now an acquisition on a company called Rockwell Collins. This is a very large acquisition. Before Rockwell Collins, UTC's aerospace consisted of 2 main segments. Pratt and Whitney, which is an engine manufacturer, and also UTC Aerospace, which did some work in the aerospace field. This makes UTC Aerospace perhaps the strongest aerospace company in the world, at least in the segment that they operate in, producing these parts and these systems that are used by companies like Boeing and Airbus to manufacture their airplanes. And so that is really exciting. So they also operate in Otis elevators, building systems. Now, worth mentioning, the reason I'm mentioning is this company has had a lot of change in the last few years. I, generally speaking, do not like a lot of change, and so this is a con. We'll get more to that later, but they used to own Sikorsky helicopters, and they sold Sikorsky helicopters to Lockheed Martin in 2015, and so they sold that, they bought Rockwell Collins, and look, 2018 is a more lofty market by valuations than 2015, so arguably they sold Sikorsky a little bit early. Maybe they could have achieved a higher price if they sold Sikorsky today. So they sold that back in 2015. But then in 2018, the peak of this market, they're buying Rockwell Collins at a high watermark, in my opinion. So that's a con, and there's a lot of change happening, and it's worth understanding that background. And so certainly I would be happier if they still owned Sikorsky. That being said, I really do like the Rockwell Collins acquisition, because now that they add in Rockwell Collins, it really makes UTC Aerospace, along with Pratt and Whitney, just a leader in the aerospace field. So I love that. By the way, I just did a video on Honeywell. This is a competitor. I'll link in the description below. I don't own Honeywell, but Honeywell is also really known for being strong in the aerospace space. And now I would say with Rockwell Collins, I think that UTC is probably going to go really strong against Honeywell, and they're probably a lot stronger in that space than they were before. Please put in the comments below if you know a lot about aerospace, you're really comfortable, you understand, you work in that industry. I would love to hear your thoughts, how you think Honeywell and UTC, now with Rockwell Collins, kind of stand up head to head. I'd love to hear that. So please include in the comments below. Would love that insight if anyone out there knows. So moving on. What I did next is I just looked really quickly at the 2017 annual report. One of the first things that I looked at was just operating profit by segment. How much profit is coming from segment? So this is all pre-Rockwell Collins. Otis Elevators has a $2.1 billion operating profit. In other words, that is 22.34% of the business as measured by operating profit. Carrier HVAC Systems, $3.1 billion operating profit. This is, in other words, 32.98% of operating profit for the whole company. Aerospace minus Collins does not include Rockwell Collins yet. 1.7 billion operating profit comes from Pratt and Whitney, and 2.5 billion operating profit comes from UTC Aerospace. If I add both of those up, that's 4.2 billion operating profit. So 44.68% of the operating profit comes from aerospace, broad umbrella of aerospace, which includes Pratt and Whitney and UTC Aerospace. This was before Rockwell Collins. With Rockwell Collins, aerospace gets even bigger. So the reason I'm doing this is this really paints the picture that this is an aerospace company. So even before the split up, this is an aerospace company. Even before Rockwell Collins, this is a real heavy focus on aerospace. Now it's totally an aerospace company. And so thinking logically, why are they splitting this thing? That probably came into the equation. So what is really going to happen now for people who own UTC like myself, people who are considering buying in? What is going to happen is United Technologies as a company will continue. The UTC ticker will encapsulate aerospace. It will include Rockwell Collins, UTC Aerospace, and Pratt and Whitney. And UTC Aerospace and Pratt and Rockwell Collins, they're now just one. I think it's called Collins Aerospace. And so that will be the new UTC. And then what's going to happen is for Carrier HVAC equipment, Otis elevators, they are going to spin those off as separate companies. And so let's say right now I own stock just in UTC. After the split, I will own stock in UTC, Carrier, and Otis. And the thing worth mentioning here is there's a 2020 time frame. So this spinoff will not even happen until 2020. So that's quite a ways out. It's going to cost $3 billion to make this spinoff happen. Mind you, this company market cap overall is about $100 billion. So we're saying 3% of the overall value of this entire company is going to be spent to make this spinoff happen. So we'll talk more about that later. But worth mentioning, it's tax-free, and it's unlike some of these other spin-offs and changes that I've discussed on my channel before. So if you guys have been following me a real long time, I'll link in the description below to the old videos. I used to own Dr. Pepper Snapple, and Dr. Pepper Snapple, what happened is this whole M&A activity happened where it got acquired by private equity and merged with Keurig and brought public as the Keurig Dr. Pepper company. And so that was a really interesting one. I'll talk more about that in a minute, how that one was a little different. Actually, I'll talk about it now. What happened with that one is Dr. Pepper Snapple shareholders, they got this big one-time cash payout, a special cash dividend, and then they got a small piece of the combined company. And they could choose what to do with that cash payout. Should it be reinvested and just buy more of the combined company? Could it be used to buy something else? Whatever. This is different because, to my understanding, there is not a cash component to this split that's happening here. What's happening literally is I own shares in UTC now. After all of this happens in 2020, I'm going to own shares in UTC, Carrier, and Otis. And so they're just splitting it, but there's no cash payout to the best of my understanding at this time, although this thing is happening in 2020, so a lot can change between now and then. But what I'm saying is I like how this is being handled as compared to Dr. Pepper Snapple. I really did not like the way the Dr. Pepper Snapple thing was structured. And the reason for that is it created a taxable event. There was this big cash payout, creates a taxable event for shareholders, whereas if Dr. Pepper Snapple handled it differently, all of the DPS stock just rolled into the new thing, it would be a tax-free event, the way that these guys are doing with Otis, Carrier, and United Tech. Now, obviously, United Tech will survive, but after it survives, it will no longer include Otis and Carrier. It will just be aerospace stuff. Allow them to keep focus. And so the dividend, obviously I invest for dividends. I want to use my dividends to pay bills, to eventually pay all of my bills. And the big question here is what will happen after this split to dividends? And the question is, we have three companies now. Will they all pay dividends? Will none of them pay dividends? What will be the dividend strategy? Will they raise dividends over time? I don't know, but I would suspect, if I have to guess, that they will each pay a dividend, and they will pay growing dividends, and they will each have a dividend strategy, because that has been the heart of this company. That has been the value, the core of this company. And I think they're going to continue that into the future. I think that will be their legacy. That being said, with any kind of reorg like this, there could be some dividend disruption, I would say, in the first few years. It might take some time for them to figure out what their dividend policy will be, how much it will be. They may start the dividend at a lower rate than it is now, at a lower starting yield. So all of those things are up in the air. I don't know what they're going to do, but what I plan on doing is waiting and seeing and holding. And so what we'll talk about that in a minute, but what are some of the pros and cons of all of this? So from a pro standpoint, there's more transparency. I did a video on GE recently. I'll link in the description below. GE is kind of like a black box. No one knows what's happening there, and all this bad stuff happened, and then all of a sudden it started surfacing, and basically the company crumbled. And so that's bad, because industrial conglomerates by nature can have a lot of poor transparency. By having 3 companies here instead of 1, each focused on doing one thing really well, there's more transparency, more accountability to shareholders. So I like that. That's a pro. Another pro, I can optimize my buy prices. I get this question, Ian, why don't you just invest in an ETF? Ian, why don't you just invest in an index fund? 1, I don't want to pay the fees. But 2, when you just own an ETF or an index fund, there's a lot of companies in the basket, and at any given time, some of the companies are on sale, some of the companies are overvalued. But when I buy the ETF, I just have to buy it all, so by nature, it's not optimized. The beauty here is this is kind of the same thing. Before UTX right now, it's kind of like a little mini mutual fund, mini ETF. It's got 3 companies in one. Well, now that there's going to be 3 separate companies, sometimes Carrier is going to be doing well. Sometimes Carrier is going to be doing really bad. Sometimes Otis is going to do really well. Maybe Otis is doing really well while Carrier is doing really poorly. Maybe UTC is doing really poorly while Otis is doing really well. And so these 3 companies, they're going to trade very differently. They're going to have their ups and downs. I don't think they're going to trade always in tandem. And what that does is it creates buying opportunities. It creates more efficiency, because now instead of just buying everything at once, I can pick, oh, I want to buy Otis right now because Otis is on sale. Or, oh, I want to buy UTC Aerospace or Collins Aerospace, UTC as a company, because that's what's on sale. Creates more efficiency. What else? Huge aerospace focus. I think they're going to be a true leader in the space, with Rockwell Collins staying really focused on aerospace, making that the legacy of the main UTC ticker, the old ticker. Hopefully that ticker doesn't change. We'll see. It doesn't matter. But that will be a big legacy for them. They're going to be really focused on aerospace. I like that, because I think that's a really important field to have representation in my portfolio. I was thinking about Honeywell, actually, to get more representation in aerospace, but maybe I won't do Honeywell, because I think UTC is going in the right direction there. Tax-free. So unlike Dr. Pepper Snapple, which did this big cash payout, real small amount that one gets actually in the new entity, they're just doing it all tax-free. They're just saying, hey, you have UTC now, you're going to have 3 companies after. Love that. What else? No cash payout. Again, also price drop. I'll tell you, on this news, this stock went down. And I think it went down for 2 reasons. 1, because it's going to cost around $3 billion or more to do this split. But 2, there's some uncertainty. But I would say 3, Rockwell Collins, some of the numbers that came through in the recent announcement were not as lofty as some of the analysts were expecting, although when one makes an acquisition like this, the efficiencies don't come right away. It takes at least, I'd say, a year. And so anyways, I think that they're going to work through that. It's going to do really well. But certainly there's been some price pressure here as a result of all of this. And I like that, because I am buying more of it. This is actually a focus of mine to buy more of this company going into next year, 2019. Talk more about that in a minute. So those are the pros. What are the cons? More stocks. I have 38 stocks now. This is going to add 2 more stocks to my portfolio. Now I'm going to have 40. I'll tell you, I'm going to manage this as 1. And so you're wondering, is this still your number 4 stock? Are you still going to hold it? Yes, I'm going to hold it. Yes, it's my number 4. My number 4, literally, I'm still going to look at it as 1 company, although it's now going to be 3 tickers. That's just how I'm going to do it. And so, but it's more stocks. It's going to cost $3 billion. If I had my choice between splitting them and not splitting them, I would not split them. And the reason for that is this is wasting money. This is wasting $3 billion. And quite frankly, we'll talk about this later, but the reason a lot of this split is happening is an activist investor is involved. I dislike activist investors. I think a lot of these activist investors are short-term focused. I think a lot of them come to the plate. They're looking for a quick payday, whereas I'm a long-term investor. I'm looking at decades and decades out. And so short-term, I think it's a lot of cost for people trying to push this thing up to get some short-term gains. Anyways, I don't like the $3 billion in cost. I don't like that it's an activist investor stock, and I quite frankly don't like that the activist investors got their way with this thing. And so it's just, look, it's the nature of investing, nature of long-term investing. Unfortunately, right now there's a lot of activist investors out there. They buy large positions in these companies. They try to get on the board of directors. They try to influence changes at these companies for short-term profits. It's just what it is. And so that being said, I think it could have turned out a lot worse here. I think it could have turned out a lot worse, meaning instead of splitting into three, perhaps they would say, oh, we're going to sell Otis to someone else. We're going to sell Carrier. I'm happy that I'm going to retain ownership here to the company. It's just going to be 3 tickers. So what else? Too many deals. It's just too many deals with these guys. I think they're doing too much. First, they sold Sikorsky in 2015. Again, like I said, this was a few years ago, and maybe they could have extracted more money if they just held it and sold it now or kept it. Rockwell Collins closed this thing 2018, probably high watermark deal, and now they're splitting it. Just a lot of change, and I think a lot of this change, again, is influenced by activist investors, short-term thought, and it's just not aligned with my long-term vision as much. And it calls into question, quite frankly, what will happen with the dividend. That's where I need to wait and see. And there's going to be duplicate teams. So in my opinion, one company is always more efficient than 3 because think about it, legal team, finance team. Surely each division is going to have their own team, but often from my experience at large companies, or at least at mid-sized companies that I've worked at, when you have different divisions at one company, sometimes resources, they can be shared. Like sometimes, for example, let's talk about marketing. You might have a marketing team, but the marketing team can work across all the divisions of the company. Now you're going to have 3 companies, you're going to have to hire 3 marketing teams, and so there might be more headcount, more costs, etc. That, in my opinion, is inefficiencies. And so there are pros and cons with this. Net, look, if a split had to happen, this is how I would have done it. I'm happy that it's tax-free, that it's 3 companies. There's, to the best of my knowledge, no cash payout. That being said, if I had an opportunity to say, hey guys, don't do this, that's what I would say. I would just keep it at 1. And quite frankly, I would have never sold Sikorsky. And so that is the state of affairs, but it's still my number 4 favorite stock of all time. So what's my strategy? I'm continuing to buy this. I'm buying this one very regularly. It's my number 4 favorite stock of all time, but by dollar amount, it's not where it needs to be. It's not number 4 in terms of dollars by any stretch of the imagination. And so I have a lot of work to do. So I continue to add money to this company, and I'm adding to it right now before the split, and after the split, I'll be adding to it too, but I'll probably add more selectively to whichever of the 3 companies is most on sale at any given time. Next, I am keeping a very close eye on the dividend and what they say about the dividend. So obviously if they say, hey, there's 3 new companies, we're not going to pay any dividend at all, ever. Look, at that point, it probably would not make sense for me to own this company anymore because I invest for dividends and cash flow. However, if they say, hey, we're going to have 3 companies, they're all going to pay dividends, I will completely stand behind that, and I will be fine even if the dividend rate is a little bit lower than it is now. I actually think that will probably happen. With the 3 new companies, there's going to be a lot to figure out. They probably want to keep their costs in check. They probably want to conserve cash. So probably with each of the new companies, the percentage dividend yield will start a little bit lower than it is now. I am fine with that, but what I'm going to do is watch closely, because what I want to see, what I care more about the starting yield is the growth. As we look out, I mean, I'm not going to know this probably till 2022, 2023. If they pay a dividend at these things, it splits all out in 2020. I want to see what happens in 2021, what happens in 2022. Are each of the companies raising the dividends? Are they raising them aggressively? That's what's going to be important. And by that time, if I don't see that happening, I will really have to take a close look at this and probably move on to something that is more aligned with my dividend growth perspective. That being said, I am taking the stance here that I believe the dividend strategy of the parent company, UTX, will make its way to all three companies and that these will all be dividend growth companies. That's going to be my take on it at this point. That's my hope, at least, and my best guess, and that's why I continue to deploy money into this stock. What else? It's not like Dr. Pepper Snapple for me, so I already mentioned this, but a lot of you asked, Ian, when Dr. Pepper Snapple did this reorg, you sold it. That was a real corner case. I rarely sell stocks. The reason I sold it, quite frankly, is the way that deal was structured. I didn't like it. It was a lot of cash payout, small ownership in the new company, created a taxable event anyways because of the cash payout. So I actually sold my Dr. Pepper Snapple even before that whole reorg happened. And when the news was announced, I thought about it, and then I sold. Now, it wasn't only, though, about that cash payout and how it was structured. It was also because Pepsi is my number 2 favorite stock of all time. Coca-Cola is one of my top 10 favorite stocks of all time. I had, and I continue to have, huge exposure to beverages, to soft drinks. And so I had done very well on Dr. Pepper Snapple, extraordinarily well. And at that time, I had to take that cash payout anyways. I knew I did not want to reinvest that into Dr. Pepper Snapple because I already have too much, or I wouldn't say too much, but I already have enough representation in the soda industry. And I knew that I'd then have this small position in the new company, and that I just, quite frankly, didn't want to have, didn't want to add to, didn't want to manage. And so Dr. Pepper Snapple was a real unique situation. I'd say the third thing that was going on at that time is there were some deals. I actually bought Pepsi at that time with some of my Dr. Pepper Snapple proceeds and bought it at a real low cost, as some other stocks at that time. I'll link in the description below to a video about when I sold that company and why I did that, how I redeployed the money. But again, that was very different because it was a taxable event. Whereas here, to the best of my knowledge, based on what they're saying so far in the press releases, and again, it is very early, but this should be tax-free. And so I am behind it. I continue to buy. I like it. I like that the price is dropping. And the biggest unknown here is when I have 3 companies, what will that dividend policy be? So what do you guys think? Please include in the comments below. Love the community here. So blessed that we have a thriving community. We're all sharing our ideas. We're sharing our thoughts, our passion for dividend investing. What do you all think about this whole split at United Technologies? Are you buying? Are you holding? Are you selling? Hey, it's all on the table here. Please, do you disagree with me? Do you agree with me? Include it in the comments below. And also, if you're in that aerospace industry, would love to hear your thoughts on Rockwell Collins, this combined entity, how powerful it will be in the space. And so all of that will be very interesting here. Now, one closing thought here. By the way, I own 3M as well, ticker symbol MMM, makers of this whiteboard. They also make parts, adhesives, materials that are used all over in industry, in airplanes, in fact. And what I will probably do now, look, 2019 for me is going to be all about my top 10, or mostly about my top 10. 3M is my number 10 favorite stock of all time. I'm starting to think, because there's some uncertainty here with the dividend in the future, look, I'm going to continue adding to this thing, but I might partition just a little bit of my funds that would have otherwise gone to UTX into MMM. Probably that's one slight change that I'll make with my 2019 strategy as a result of all of this as well. So worth mentioning. Thank you for watching the video today. In terms of full disclosure, I am long. I own the stocks mentioned today. I own shares of United Technologies, ticker symbol UTX, and 3M, ticker symbol MMM. I own those in my personal stock portfolio. In terms of a friendly disclaimer, I am not a licensed investment advisor. Today's video is not investment advice. This video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally, I'm just sharing my personal journey here on YouTube for fun and entertainment. Thank you everyone for the support. If you enjoyed the video, please take a moment to subscribe, like, comment. All of that means the world to me. It is the #1 way that you can thank me for producing these videos here on YouTube, because I am not producing any kind of course material. I am literally putting my best effort here on YouTube for everyone to see. Hey, thanks everyone. I will see you all in the next dividend investing video.